me just do this all right here in MotiveWave. Recording 1080. That's the one bad thing about the ultra wide monitors. You got to work with 1920 by 1080. And we're just going to show MotiveWave. Okay, so that should be a better look for you guys now. So we're doing the Wednesday webinar here. It is September 21st, and just diving into the markets here. As I said, we got Bank of Japan, Fed today. I think we have some data coming up. Not even really worried about the data, to be honest with you. I think it's more about Fed policy. I think it's more about where bonds are going. Commodities and currencies are pretty tight in here. I think it's all about stocks and bonds. So there's a couple different wave counts that we're looking at here. They all point to the next 3 to 5% as lower in the market. So I'm not really worried about what the higher term counts are. I'm really just focused to get down to about the 2060 area, and then we'll make our decision. This is a wave count that we've talked about every Wednesday webinar. The timing in this was unbelievable. This is the S&P on the daily. If you go from July 20th down to the lows here, that was 29 weeks. 29-week rally, which is shown right here. Okay. It was 144 days or 29 weeks. If you go 144 days up, that's this guy right here, which was September 7th. Pretty much the beginning of the breakdown. Also notable is the 618 retracement caught the B wave low. Okay. And I just redid the YouTube video for this, which will go into the Fib interactive e-learning experience drawing for those 10. But I just covered this again because we talked about this key hotspot of timing, and that's why we're starting to see some volatility here. The distance of February 11th up to the A wave high on April 21st was 46 bars. And you drop down into an ABC down here in B. That was also 46 bars. You go another 46 bars up, and that points to this guy right here on September 1st. So we had a lot of timing right there coming in between September 1st and September 8th. So it's pretty much just the first week in September, and that's why we're seeing some volatility. You combine that with a cluster of Fib resistance here, and that's why we started going short. We were carrying about 8 or 9 short positions. We booked some profits 2 days ago with our research customers. We're still holding some shorts going into the Fed. On top of that, you have the major and minor power waves on the sell side. This is the proprietary indicator that I offered with the Fib course. And if you do a 500 period look back, that thin red and thick red line are your major and minor sell levels. Okay, so the minor caught it just about perfectly. So there was a wall of Fib time up here and price, as well as power wave resistance to say this is going to be the top. So that's why I'm looking at this whole rally as a 3-wave move, which could be a whole false break in 2016. I'm not subscribing to it. I'm not telling you that's exactly what's going to happen because the implications are for that. A huge drop. I'm a trader. I'm not an analyst. I look at multiple scenarios. I carry multiple scenarios, and I trade the most likely one for that current time. So the most likely scenario based on the 3 wave counts that I'm looking at, all viable, all correct. They all count, or they're all looking for a move down into the 2100, possibly the 2080 mark. Okay, so when all of your wave counts point to the same direction, you want to be in that direction. Once we get down to this zone with a lot of profits in our account, hopefully, we can figure out, is it the wave 2 just a false break and we're going to rally in wave 3? Or if there's no response from the 2100 to 2050 area and we just get kind of a feeble little wave 2, the internals aren't great, sector participation isn't great, we're going to judge the power of the bounce and figure out, is it a wave 2 corrective rally, which will ultimately fail and drop in wave 3? Or do we get real strong leadership, internals, market acting strong from this move down, and in fact, we're rallying in wave 3? I don't know. You can't know. To say here's exactly where the market's going would be a disservice to you. I don't know which one's going to happen. But from all the work that I've done, the next move points to about a 50 to 100 point move down in the S&P, and that's all I care about. Okay, the rest of it doesn't matter. The rest of it is just cocktail talk. So that's what I'm focused on the downside in the S&P. Deuce, you just said your fib chart says 1850 by 2017. Are you sticking with that? I don't know. Okay, I don't know how else to underline that anymore. Like, I don't know. Okay, I don't have a feeling. I'm trying not to have a feeling. I'm trying to trade the most likely, source of resistance down into the next source of support, and that's 50 to 100 points on the downside. Okay, so that's what we're focused on. That's why we are carrying a bunch of short positions. NASDAQ's acting strong. Yeah, no problem. I don't mean to jump on you. I just want to emphatically make that point. And, guys, we always go over this and like, well, Elliott Wave doesn't work because it's how you can go up or down from here. I mean, oh my God, if you go into the market saying this is the only thing that's going to happen and I'm going to trade only in that direction because here's what my system says, you're going to get destroyed. Like, your account is going to go to zero because you can't force your will on the market. You don't have a system that says here's exactly where the market's going. It just doesn't exist. So I'm looking at multiple scenarios, and I trade the most likely scenario, and that's what's wonderful about MotiveWave. That allows us to do Elliott Wave. Okay, so here's the NASDAQ equivalent, and what's interesting is we still have that same three-wave move in the NASDAQ, but the difference here is tech is outperforming. I love that. Matthew Estebal says, still in college class, so no audio. He's in college right now watching a webinar. That is awesome. I can't tell you how great that is. So here's the deal with the NASDAQ and the Apple move, right? So we still have the three-wave move up in the daily NASDAQ, but the retracement back has been very strong. So as I get off the daily down into the intraday, it's been a really strong move back. Okay. So we've retraced more than 100% of this recent drop from from September 6th. If you just go back to the S&P, you will see that the S&P has retraced like 50%, exactly 50% of the drop from September 6th. So obviously this is a tech-led rally, right? So the S&P is only retraced half, where the NASDAQ is up here. The equivalent of the NASDAQ is like 2190. And a big reason is obviously Apple. So Apple is also into a pretty interesting zone of resistance. And let me just pull that down. There we go. So kind of like the S&P up at the highs in September, the Apple chart shows a minor power wave on the sell side and a major power wave on the sell side. So we have 113 to 116.5. Plus you have this cluster of fib resistance in wave 5 of 3. So you have 1, 2, 3, 4, 5, 6 different fib levels to say we have resistance between 115 and 118.60. So I sold this. I sold a 115, 120 call credit spread for CNBC 2 days ago on the Trading Nation video that I do. I sold that. We do have other short positions with our research customers, so I didn't put that short on for research, but I did sell it for CNBC, and it's looking like we should be able to just get away for move back down. So Apple looks to be a little overbought. I don't have a huge degree of confidence in that because that's obviously the strongest stock and the strongest index with this, which is the NASDAQ. So you got to be real humble when you're selling, big moves like that. You got to be in, and if it's not working, you got to get out. So that's the tech world. Over to bonds. Bonds have held lower support. And as I said, the name of the game in here is all about bonds and stocks. It's not about commodities and currencies. It's all about where bonds are going. And there's been a pretty good move down here in TLT. TLT represents the 20-year plus U.S. Treasuries, so 20-year and greater, 20 and 30-year Treasuries. And some people are thinking, including myself, that they're dropping the bond price, which means the yields go up ahead of a Fed rate hike. And then news came out of China was a net seller of 20 billion of our bonds. That I think they were holding 1.2. Wait a minute. I could be off. Somebody correct me. Is it billion or trillion? I don't know. Whatever. I think it was 1.2 billion. That can't be right. I got to look that up. Boy, that's embarrassing to not know that. Whatever the number was, it was like 1.2, and they sold it down to 1.0. So they're a net seller of about 18% of their bonds. Let me just check this article. Chinese selling bonds. I got to know. That's pretty bad. Chinese selling bonds, 1.2. Anybody can find that article, let me know. It is trillion. Yeah, thank you. I was like, billion sounds like a little low to me. They were holding 1.2 trillion, and they went down to 1 trillion of our bonds. It's insane. Oh, my God. How can you be off by a... Wow, that's a lot. Anyway, so my point here is foreign central banks were selling our bonds, right? And they were selling the longer-term bonds, which pushes up our longer-term interest rate. So it's not so much the Fed doing it, it's foreign central banks selling that bond. So I was like, all right, if it's not so much the Fed, I mean, I don't think China's going to all out just destroy our bond market and push rates up. They're trying to bring money back home. And, generally in that kind of move, you can fade that. So looking at TLT, we went down an A, triangle, and then B wave tells you there's one more C wave to go. We have the minor power wave right there. You got the major power wave. Plus, we have 100% A equals C projection. Plus, you have the 200% B versus C external retracement. Plus, you have the 618 retracement of this move right here, this good move right here. Let me just make sure that guy is, where's the red is the 618 retracement right there. Okay, so there's a lot of reason to buy bonds, and we did that. So I think we sold, actually we bought a 134, 137 call credit spread, call debit spread. We bought it out of the money when the bonds were down here. We went slightly out of the money, bought a 134, 137 call debit spread. Just looking for a little bit of a bounce here. We're up a little bit of money in that trade, and we'll probably hold that into the Fed here today at 2. Also related, and then Rick makes the point that Japan is second biggest holder of our bonds, and Bank of Japan is tonight, and that's going to be interesting. So we should take a look at dollar yen. We should take a look at the Nikkei, and believe it or not, I don't even have FX quotes set up here on IQ feed, and I should. I can just tell you that dollar yen is holding the 101 level, and I'm thinking it drops down to 95. I know that's my target in dollar yen. So the way this whole bond and stock relationship work is if dollar yen drops, that generally brings our interest rates, our bond yields lower. So if dollar yen can somehow get through 100 Forex rate down to 95, that's going to bring our bond yields lower, which will make this TLT chart work. It will bring TLT up if our bond yields go down. So I'm looking for the Fed to be pretty dovish into the Fed. Dollar yen breaks down, bringing our bond yields down, bringing our bond prices up. What impact that has on stocks, not really sure, because the stock-bond relationship is pretty uncertain in here. Sherman, I believe it's Japan is the second biggest holder. Rick A points that out for us. And I still can't find that article, but that's all right. Let me just bring out our trade decks. Let me show you what other positions we're holding with customers. Selling U.S. Treasuries. Can't even find the article. Look at that. That was June. I'm sure this isn't. Okay. That's what we're looking for. Chinese U.S. Treasury holdings hit low since 2003. And this is important. This is how I combine the technicals and the fundamentals, right? I mean, when you're not going to get the news story until after the chart pattern works. So I like to know why the bond market moved. It's never going to help me trade in the future, but that's fine. China, biggest U.S. creditor, owed $1.21 trillion to the U.S. government. That was the lowest level. Okay, so actually they went down to 1.2, if that's right. Try to keep currency stable, includes international, blah, blah, blah. Japan maintained its second status, second builder at 1.15. So, wow, they're just behind China. Not that much. Japan's a huge holder of our bonds. So, all right, that's interesting. So, I like looking at the combination of the technicals and the fundamentals together. So let me just go up to the trade desk here and figure out what else we're going to talk about. CVS, we're short some staples. Consumer staples is in weak in the face of increasing interest rates. CVS has been a good short for us. We have ExxonMobil, which has been a good short for us. Crude oil really isn't breaking down, but the energy stocks are. We're short the FXE, which is a long U.S. dollar play. Let's talk about that. There's the TLT trade. We are short SPY. This is going to be a total loser. That's a stinker. We paid $1.15 for it. CVS, that trade's working well. Booked half profits. XOM, we're almost at max profit on a $4 wide, $3 wide put debit spread that we bought out of the money. That's a good one. We're short emerging markets, and we are long tech XLK as a hedge. All right, so that's a full look inside the members trade desk. Let's take a look at crude, and then we'll spin into XOM. So crude has really been kind of messing around, I think, the $40 to $50 range. A lot of people are trying to pin the movement in the stock market on crude. I don't think it has anything to do with it, namely my network, CNBC. They're trying to play the crude S&P relationship. It's just not the case right now, and I'll show you. Add study, instrument overlay. If you take the crude market and you throw the S&P futures over it, the correlation is pretty specious. So I don't think it has anything to do with crude. Okay, back here, when crude oil is coming back from the brink of collapse, sure, the correlation was much better. But see how it's starting to wander now? S&P is moving up, crude oil is moving down. Crude oil put a big rally up into the $48 region, and the S&P's barely got a bid. Then they both started selling off a little bit, right? But look at this. Okay, so basically, it's just not the case. I mean, if you compare this recent drop in the S&P and crude, right? S&P is well through this low from September 1st. Look at the red line. Okay, we're well through that low where the crude oil market actually made a double bottom. Okay, so just compare this low to where the S&P is now compared to this low in crude, where crude is now. Crude is acting stronger than the S&P right now. Okay, but the correlation I think is pretty weak. I think it has to do with the bond market. It's more about bonds rather than commodities. That said, the energy stocks are acting weak. Exxon, we're pretty much at max profit on this, so we're going to be booking profits on this guy in the open and looking to reestablish, because this is a pretty simple wave count, and we're just looking at this as a push down in 1, up in 2. A Fibonacci projection is going to be right at $80, and we're at $83 right now. So we have another $3 to go until we hit the minimum downside target, which will also be an uptrend channel support. So Exxon's breaking down. The energy stocks are acting pretty weak, which may finally weigh on the price of crude, but I think crude's pretty much lost its way. So I'm not so worried about crude oil. Okay. I'm going to take a breath here in 1 minute. I see the questions coming in. Dollar is hella range bound since March 2015. I do have an FXE put spread going on, which is a short euro, long US dollar. The range in the currency markets has been, insanity, which you guys have probably heard me say this. Currencies are either famine like that, or are either feast like that, or famine like this. So the dollar's about due to jump into a feasting period, and that'll be fun. But, I'm giving it the benefit of the doubt. I'm looking at the dollar potentially breaking out here, but it has a lot to prove because we've been in a range for like 18 months. So I have an FXE put spread going on, and that's going to play into hopefully lower commodities if the crude oil market does want to break. Gold has completely lost its way as well. I think gold is a short. I'm just looking for a good Elliott and Fib setup to control risk to put the gold trade to work. Emerging markets ties into a stronger dollar position. If the dollar is going to rally, it's going to hurt foreign currencies, especially emerging market currencies and commodity sensitive currencies. So EEM is set to fail in a big way. EEM has rallied in a 3-wave move off the lows, and it's looking like we're starting to get the impulsive push lower as we get down to smaller time frames. Okay, so that's the daily, and here is the 3-hour. So just like the NASDAQ, right? The NASDAQ has retraced more than 100% of the drop from September 6th, but EM is only like the S&P done about a 50% retracement. Retracement 2V1, so right there. So EEM continues to look good. We're break even on that trade, but has a lot of potential here post Fed. Okay. Glenn, I already talked about TLT at length up. Doji, what's up? Was in your dreams where you're always right. I'm sure that's funny. I don't remember what that's in response to, but whatever. I'm sure that was funny. CVC says Bank of Japan modifies policy framework and keeps negative 0.1 deposit rate. Okay, cool. GLD, yeah, I'll take a look at GLD. There's no good technical setup for me to show you. I wish there was because I'd love to be short in gold. It's like crude. It's kind of lost its way. That's what I'm saying. Like commodities just don't have a direction in here. The edge is not with the commodities. It could change after the Fed, but you can tell I've been doing a lot of work on this guy. We are coming off of a kind of a Gartley buy. There is a 1-2 wave setup here. Let me straighten this guy out. Like the currency market and the other commodity markets, this guy has a lot to prove. We did a huge, very deep retracement from this move up. We retraced more than 78%, which is usually not a good thing. Starting to kind of peak up here before the Fed. I don't know. I really just don't have an opinion on gold. If you just look at this thing, let me get off of a chart with all the labels on it. It's just very sideways, right? It's just no real trend, no real direction here. If we were to fail, I am looking at this kind of triangle. If we were to fail, 1340, 1350, we could be doing a triangle. We could go up, could go down. I just don't have an edge in the gold market right now. The bond sale, gotcha. Futures, okay, yep, we're up 0.5% here. Let's figure out where resistance is, and then after that, I'll sign off. And actually, I'll pull up version 5. Okay, yeah, it's just not going anywhere. As I described to the customers, don't care. While we're below 2160, this can do whatever it wants. Probably a 3-wave move up like that. Decompose as a correction. There it is. Yeah, 2155, 2160's got to hold. If we break through there, then I'll start to get out of some of my shorts. But nah, it's just sideways consolidation heading into the Fed. I saw, yeah, Jay, GoPro, yeah. So I actually sold puts. I did a trade in CNBC for GoPro yesterday, and I also sold. I think I sold 13 half puts in December for GoPro. If I get put the stock, that's fine. I want to own the stock. But if it just keeps kind of creeping higher, then I'll just collect a premium on GoPro. I like the stock. I like what they're doing. I think it's, it's more of a fundamental trade. So, that can kind of be dangerous sometimes. But I'm thinking they're kind of working an inverse head and shoulders down here on the daily. Left shoulder, head, right shoulder. They've pulled back after the street didn't love the new drone they released yesterday. So I used that as an opportunity to sell puts. There's the wave kind of I'm looking at in GoPro. I've been trading the stock. I've not made money in the stock. I've been trying to hold it for a longer term move up. So just a heads up. All right, guys, we'll leave it there. I'm going to pull up version 5. I got to get my butt moving here this morning. I hope that helped. If you guys want to hang around, I'll load version 5, which it might be here. All right, let me go to full screen here. Oh, that is the new one. Okay, let me see if you guys can see this. All right, there we go. So here's the new splash screen. And just stop me if you guys can't see it. But here's the new splash screen. Look how special I am. I'm version 5.0 pre-beta. Not even beta. I'm pre-beta. Thanks, Tony. Select the workspace. This is my old MotiveWave version 4. I don't. It's probably going to ask me to build a workspace, but I'm not sure. And I see Tony's here with me, so.
Well, you can use any existing workspace. It's no problem. The only thing is, once you use it, you can't go back to version 4.
Okay, so that's what I was kind of finding. So what do I do?
Well, if you don't already have a version 5 workspace that you were using, you can just go ahead and create a new one,
See,
and then you can do an import of your old.
I think this is a version 5 workspace right here.
Well, you have to choose a workspace from the drop down, right?
Oh, I did. Oh, maybe you can't see this. All right, let me change what I'm sharing. Full screen, main screen. There we go. Okay. So now you should be able to see it.
Yeah, but you should have all the same workspaces you had before there, right? So I'm not sure if that second one is a version 5 one or not.
That's what I'm saying. I'm pretty sure this is a version 5.
Okay, yeah, then go ahead and choose that one.
Okay. Continue. So here's version 5, pre-beta. Can I say that again? I got the pre-beta version. That's so special. Okay, here she is. All right, let me change Motive. Let me change what I'm sharing to just this MotiveWave. There we go. There's the new MotiveWave. I'm gonna change. Do you mind if I go to white charts because I have all my labels set up that way?
Yeah, it's fine, and I fixed that bug for you already for the next update. Actually, I have a lot of fixes for you for the next update.
Okay, sweet. So I'm just gonna go to okay. So here it is. It's pretty awesome. Like just what I found is the whole interface is much smoother as you move around. Even when you switch symbols, if I go to the NASDAQ, wow, look how fast that was. It gives you kind of a cool progress bar. It's just a smoother interface. The icons are all redesigned. It just looks much more updated. Tony, what else can I point out here?
Anything you like, really.
Yeah, it's just smooth. It's just much faster, and I'm sharing my screen right now through GoToWebinar, which is a resource hog, and it's responding extremely well here. Oh, I pulled up the 195, which is a big calculation, and that actually worked very fast. So
yeah, it isn't really the calculation issue. It's just that if you haven't loaded before, there's a fair bit of data to pull from my Q feed for that.
Right.
For that chart.
It's got to load 39 5-minute bars.
Yeah, for every bar that you see, so it's going to be a fair bit, I guess.
Yep. Jay wants me to go back to the black theme. Okay. I like the black theme, but as I was describing to Tony, like when I'm doing presentations and taking screenshots of my charts, and if I write a book, black charts are horrible when I'm doing a live presentation. So I'd have to go back and recapture all my charts. That's pretty much why I leave them in white. So you shouldn't have that issue. What does red and green look like? Ooh, isn't that smooth?
First, I'm not a fan of red and green. It reminds me of a Christmas tree, but that's just me.
What's wrong with Christmas?
Oh, I love Christmas. I just want to see it all year round.
I don't like red and green either, actually. I always liked orange and white. That always worked for me.
Yeah, orange and white's kind of nice.
It looks good. It looks good. But yeah, working real smooth. Works real nice, and just a smoother, more responsive interface. So I can't wait to dive in a little bit more. There was a few little issues that Tony just worked out. I can't wait to get the new version, and this everyone kind of makes MotiveWave their own. So everybody has to find the right way to make it their own. But I pretty much have a set way I use it, and I'm going and looking at Apple dropping. So there we go, baby. So that's a sneak peek. The quote spaces are redesigned, new fonts, all new icons. It's really looking pretty nice. So
yeah, and also the replay mode has been changed quite significantly. I got a list of about 20 different changes I've made so far. We're actually not done with changes. We're missing. We still don't have the light theme yet for the window theme, so that's going to be done post beta. And I think we're going to actually go back and look at some feature requests after we get the beta out And depending on, I guess, how many issues we have with the beta, we may end up incorporating some feature requests that people had from before.
Excellent. That sounds very good. Yeah, you guys are always very responsive to user feedback.
Try to be. I mean, that is the best source of feedback, really, when it comes to evolving the product.
Well, what other questions do you guys have so far? I'm just getting comfortable with it and just looking at the new features. It's a much more sharp.
One thing that is notable is you can actually change all the keyboard shortcuts now in version 5.
I saw that. I can't bring the drop down because, well, I guess I can. Just off of preferences, right?
Yeah, just click on preferences, the gear in the top right corner.
Yeah. And then can you see my preferences dialog right now?
I can't, no.
Oh, shit. Let's go to webinar. It's so annoying on a Mac. It's so annoying. Main screen. Okay, I'm just going to go to the to the main screen and show you the whole thing now. So there's the preferences dialog.
Yeah, so go under keyboard, yeah. So you can go and change anything you want. You can change the existing ones or add shortcuts for things that we haven't defined yet.
Pretty awesome.
Like all of the templates there, you notice you can actually, by default, I think it's like Alt 1, 2, or 3, 4, 5. I always find those Mac keyboard shortcut glyphs are a little hard to remember.
They definitely are, yeah.
But you can change all those.
Yeah. No, it looks great. It looks very good.
One thing you'll probably notice, and I didn't notice it as much until I actually went back to my PC. You have like a 4K monitor or something like that, do you?
It's like 3400. It's not quite 4K.
Yeah, I actually have a full 4K monitor that I have, and I have a Retina display, and you'll see it's incredibly sharp by comparison. I didn't really notice it until I went back to my old PC and looked and I was like, wow, this is actually seems very pixelated by comparison. But because the way the Macs work, they actually fully utilize the full resolution of the monitor, even if you have it set at a lower resolution. So when you look at lines and stuff, everything is going to be much crisper.
And this is off of your MacBook Pro Retina display, right?
Yeah. I've got a MacBook Pro. I've actually been developing on the MacBook Pro now for, I don't know, probably like 4 or 5 months. So if anything, actually probably works better on a Mac now, just because of that. But with all the vector graphics and everything is just like super sharp. And I think people will definitely enjoy that.
That's awesome. Yeah. I have less than 4K because I have the ultra wide, the 34-inch or whatever, or whatever the ultra wides are. So they can't give you full 4K. It's like 3400, but it looks great. It looks very nice. But I might just go back. But could I power? And I'm sorry, guys, we're getting off the topic of MotiveWave. But if I went back to a high-powered Windows machine, Tony, I could still power 4K monitors from a high-powered Windows machine, right?
Yeah, you can. I still there's one thing that I do want to do. The way the Mac handles actually high-res displays is actually very, very good. They do it, in my opinion, right. I didn't think that initially until I kind of figured out what they were doing, but they do it very, very well. Windows, and I haven't looked at Windows 10 yet, but I know Windows 7, they kind of do it the other way around. When you look at a lower resolution, they actually don't fully utilize the full resolution of the screen, so you're not getting ultra-sharp pixel stuff.
Okay.
So you go to the very, very high resolution, and the problem there is everything looks too small. So I still need to circle around, play with how to increase the icon sizes and the default fonts and everything to make it look, I guess, the default look much better on a high-res display on Windows, as well as have some features that will allow you to either increase the size or decrease the size of the fonts and icons.
Gotcha. Okay. So Windows or Mac has it just kind of figured out how to properly show the size, but still keep the resolution, where Windows just kind of shrinks everything down to get you the resolution.
Yeah, I haven't tried to. I don't actually have a high resolution display I don't have a setup for Windows on an ultra high res monitor yet.
Right.
So I'm actually going to get Parallels on my Mac and try running it that way and see how it behaves. Now it may be that Windows 10 followed suit and actually did it properly. I honestly don't know yet.
Okay. Okay.
So that's just something I'm going to do once the beta's out. Gonna, either that or worst case scenario, I gotta go buy another high-powered PC and run it that way.
Yeah, yeah. And I'm sorry, guys, if you're hanging around, we're just completely talking tech talk here. So if you're here, video's over. We're not going to talk market stuff anymore. Oh shit, what was I going to say? What was I going to say? Completely forgot. Something about another Mac question. Oh, here's the other issue with Mac, though. They're so cheap on hard drive space, Tony. When you install Parallels, that's going to be like 20 gigs right there. It doesn't leave you a lot of leftover space.
Perhaps, I don't know, man. I've got a brand new MacBook Pro. It's got a 512 gig. So, and I don't really use it for any media stuff. So I'm personally, I don't think I'm gonna have an issue. But I mean, somebody else might. I don't know.
Oh, I'm doing all my YouTube stuff on my Mac. Like, I love producing YouTube videos on Mac, and you've got to be so diligent. I've got 3.0 USB 4 terabyte as well as a Thunderbolt 4 terabyte back. I got 8 terabytes backed up. I've got one of them almost full, just all videos that I've done. Like, you've got to get the stuff off the Mac hard drive so quick, or that thing fills up so fast. And I feel like they're just trying to get you to buy external storage, and like they're I feel like they're so cheap on memory and storage.
For the Macs?
Yeah.
Yeah, well, I don't think you're getting as much as you can for your money when buying a Mac. Although, don't get me wrong, I actually like this MacBook Pro.
Right.
The cost is I think their price points are just way off.
I think so too.
Compared to what you can get out of PC, it's kind of. But hey, for me, it's a business write-off, so it's not a big deal. But personally, I would never buy one of these. I love them, but they're just too expensive.
Yeah, I hear you. Yes, we can change to this. And then, Wayne, what are you saying? Much better on space with Windows 10 under Parallels. What do you mean by that, Wayne? Much better on space with Windows 10 under Parallels. So yeah, there's much better. Okay. So yeah, somebody asked me to change the candle. So yeah, it looks good. Looks good. Yeah, it just feels like we're getting to a point where there's room for both. I think you're going to use Mac for some things and Windows for other things. I love my MacBook Pro. I love traveling with it. It's been really durable. I think I've had it for like 3 or 4 years. I've beat the hell out of it, and it still works great. So, all right. Well, appreciate that, guys. And who's calling me? Leave me alone. All right, so we'll leave it there, guys. Kind of quiet ahead of the Fed, and should be interesting. And V5 is out, beta is working. A couple of the testers, and we're giving Tony feedback. He's right on top of it, and it's looking good. So be on the lookout for a store near you for MotiveWave version 5. Tony, I'll be in touch, and I'll get the updated version installed.
Yeah, I'll send it to you. I'm just going through my bug list of other reports that I've got, so I'm going to just try and knock those off. Once I get those, I'll send you an update.
Okay, awesome. Thanks. All right, guys. Had fun. Good luck on Central Bank Wednesday, and we'll look forward to the debates next week. It's going to be pretty fun. All right, guys. Talk to you soon. Thanks. We'll have this up on YouTube as we do every week. All right. See you guys.